Follow me on Twitter and on Library. I got in corn last night at what was it, 332. 332. Where you at? Right there, boom. Now every time it goes up a penny, so it goes up to 333. So 333 is a penny. So every time it goes up a penny, I get $10. And if it goes down a penny, I lose $10. Now, notice that it says 332, and then it's got apostrophe and then a 2. That means a quarter. So it's a quarter of a penny. So $3.32 and a quarter cents per bushel of corn. And the reason why it does that is because it trades in eighths of a penny. So that'd be a half. That'd be 332 right there. That'd be 332 with a 4. That means it's a half. That's 3/4, and that's a full. So 330. That's 0 is a full. I recommend people getting into the futures market because that's where the big money is at. Now I only had to put up $206 out of my own pocket to get into this position. And I got in at a price of $3.32 a bushel, and now it's trading at 337.5, and I made $55 so far. So you take the $55 profit divided by the 206, you come up with the 26.9% profit in 24 hours. And what do you see? How much? Just take a look at this. Take a look at that. So I made 26.9% profit in one day, and the bar moved slightly more than average. And let's go to the weekly chart. See, that's why I got in, because boy, this thing is moving. Because we're at the bottom of the market. That's why I got in. The money flow is starting to come in now. See, the money flow is starting to come in. You're at the bottom of the market. You were up, and then you went down. So now you're at the bottom of the market, and then you got this big upswing. So now you got this money coming in. Money's been coming in for a while. So now all of a sudden we're going to go in this direction. And I think it's going to go higher, of course. That's why I got in. And I'm hoping, if it goes up to $4 a bushel, prices at the store, it cost you more money to buy bread and corn dogs and stuff like that. And while you're spending more at the grocery store, I'm profiting, I'm pocketing the money. That's how you play the game. And somebody on Twitter sent me a message. They wanted to know if they could get into cocoa, if they thought it was great or whatever. And that was July 7th when they asked me that. And so I think this is somewhere around July 7th. And I said, wait until it gets to 22.50, 22 and a quarter, or something like that, right around here. Because you never know. So it's right here when he asked me the question. I said, well, wait until it gets up here because then you'll know it'll be past the 18-day moving average line. And then you got this bumps right here. So you don't know if it's going to go up, down, whatever. I would just wait until it gets to 22.50. Then you get in, and then look what happened. It went boom, straight up. And that once it went past the 18-day moving average line, it just took off. And it looks to me like what? He should take his money out and wait for it to come back down? What do you think? Let me know. couple of days ago, I acquired a corn contract, and I'm going to show you how to put in an order to offset the corn contract. So the Y stands for miniature contract, C stands for corn, Z stands for December, that's when it expires, and 20 is the year. And a miniature corn contract is $206, and a full contract is $1,029. So we're going to push the trade button. We're going to create an advanced order. We're going to sell it because I already have it. So we're going to sell. Good to cancel. And we're going to have this one down here. So this is also good to cancel. So what we're doing here is we already have a long position in the market. It's a corn contract. Price goes up, I make money. It's a long position. It's not short. So we're putting in a sell order, and right now it's 337, and I want it to sell at 350. So if it ever gets to 350, get me in, and we're going to go down here and put in a stop order, and we're going to say 324. So if it ever drops down to 320, I got in at 332 2 days ago, and so if it ever drops down to 324, it'll automatically trigger this order to get me out. I made a loss, but at least I'm cutting my losses. And this order up here gets canceled. But if it should ever go up to 350, it'll get me out and I'll make a profit. And this one down here will get canceled. So that's one triggers other, also known as OTO. So let's assume that I don't have anything in the market and I want to acquire a corn contract, and so now we're doing one triggers two. So I want to get in at 340 and I want to get out at 350, make a profit, get me out. And I want to get out. If it drops down too far, get me out. I made my losses, but get me out. So once I get in, these two become active, and whichever happens first, the other one will get canceled. I either save money or save my losses, or I make a profit. And that's how you put in your corn order and pretty much any other futures contract order. I haven't seen this type of order entry when it comes to stock market with stockbrokers. I've had numerous accounts all over the world with, Ally, Trade King, Charles Schwab, Options Express, and I have never seen this except for only in the futures market. Maybe you guys have seen it. I don't know. But let's go ahead and look at the margins on the corn. So we're going to look at the margins on the corn. Click on the margins. We're going to click on the all. And then we're going to index, and we're going to look at the mini here. So it's $206. So I need at least $206 in my account to place this order. Now, once I get that ordered filled, I have to maintain $188 in my account if the price should ever drop down far enough to where I'm actually losing and it goes below. Let's say my account drops down to the value of $187. They automatically sell that anyway, and I end up losing. So what you want to do is you want to have extra cash, and lots of it, such as $300, $400, $500 extra cash, because you want to make sure you're covered for everyday price fluctuations. The price goes up and down every day. So you want to make sure that you've got enough in there to cover your butt so that when it drops, the price drops, that you don't get triggered on those daily static moves. And for a full contract with corn, it's 1,029. So on a full contract, every time the price moves 1 cent, 1 penny, it's $50 in or out of your account. Now notice that miniature corn is 5 times less. So that means a penny move is only going to make or break you $10. And that is a good way to get into the futures market because look, $206, you know. And then once you start getting your trades in, you start getting comfortable and you start getting money, then you can start going into the bigger things. Now let's go to metals. Now if you want to play with the gold, you're going to have $12,000 in your account. If you want to play with silver, where's the big one? $17,000. You need $17,000 if you want to play the silver contract, and that's because silver is like skyrocketing. So they require more money from you as a deposit to play the game when you have such crazy volatility in the market, and that's because the brokers and the exchanges want to make sure that they are covered, and their insurance companies are covered in case you all of a sudden don't have the money to cover your losses. You know, like the price all of a sudden just swings in the opposite direction, and all of a sudden you're just out of money. Not only are you out of money, but you actually owe money because the price swung so fast, it went screaming past your sell order to where you thought you had a safety net, and now you're a negative. Now you need to start sending them. You got to wire money, you got to send checks in, and you got to do this within 3 days, business days, and you got to cover your butt. So if you want to play the big boy game, you better have something like around $50,000 in your account if you want to play this. Now, if you want to do something like energy, it was natural gas. Oh, wow. How about that? Oh, and here you go. You can play the mini natural gas for $800. You know, that's pretty profitable there. I've done the lumber. I've done pretty much everything on here. Cotton, cocoa. I've done the lumber thing. 7,000. You know, sugar. Sugar is a really easy game, but they changed the rules as to who can play. It doesn't matter how much money you have. It's just more like who can play. Sugar was a real easy game to play. You can do crude oil, gasoline, ethanol, natural gas. You want to buy the Dow Jones. You need $10,000 if you want to play the Dow Jones. So, livestock, you want to play some cattle, pork bellies and all that stuff. So, I highly recommend learning the futures and commodities to play the game, and the cheapest game is corn, $206. So I hope you learned something. Look into it, educate yourself, start trading.